the NSE 20 still going strong. What's your view on the market movement we're seeing, and what are you expecting as far as the trading day ahead is concerned?
Well, I think we are seeing a positive reaction to the recent rally by local investors, and that's a good thing because there has been a bit of a let-up in foreign activity. The thing is, local investors are beginning to get more positive sentiment, and like we saw yesterday, about 56% of total turnover was actually locally generated as opposed to foreign investor turnover, which has been dominant over the last few months. So I think that is a good thing. We are seeing a bit of a shift towards the financials now from Safaricom. After Safaricom having taken up so much of total turnover, now we are seeing a bit more attention going towards the financials as investors start to anticipate the annual reports.
Of course, we had the banks amongst the most traded counters yesterday. Equity Bank traded second at the bourse. We heard, of course, that Equity Bank has merged two of its departments, leaving more than 50 employees unemployed. This in a restructuring plan that's aimed at streamlining its operations. How are you reading developments that we're seeing on the Equity Bank front?
Well, I think Equity Bank did have suffer a bit from the fact that they had gone all out in the expansion strategy, which has actually slowed down over the last 2 quarters. And I think the reason they're doing the restructuring is that they may feel that they did bloat their employees a bit too much. But I think at the same time they are also looking towards beginning to at least bringing in some returns from the fact that they did quite a bit of expansion, and that cost a lot. And so I believe that the restructuring is probably going to be good for them as we go forward.
We know that the bank saw a slowing off its growth curve last year, certainly a slowing from the levels we got used to back in 2008. We're awaiting full year results to be released soon. Do you see the bank returning to a faster, steeper growth curve this year?
Well, that is dependent on how their loan books actually are going to look with the current results coming out. I think the thing is Equity Bank did lend out very aggressively, and I think their loan book did become a bit bloated as well. I think that now that they may have had some breathing time, they may begin to lend a bit more aggressively as well. And the fact that the economy is looking towards turning for a better turn, I think that the banking sector is one to watch, because they will definitely be the ones leading the way in whatever direction lending and the economy as well will take.
Of course, Samuel, our attention is always focused on the big caps. We've got Equity Bank, KCB, Barclays, Standard Chartered, always stealing the spotlight. When it comes to the mid-tier banks in Kenya, what would be a stock pick in that section and that segment right now?
Well, I think at the moment the mid-tier banks are really more concerned with their core capital, in that the fact that the central bank and treasury have been expecting them to show up their core capital to a higher amount. And I believe that that is what most of the mid-tier and the lower-tier banks are looking at. They're making sure that they actually reach the expected core capital. So we would be expecting to either see them coming to the market or looking for to show up their core capital or their base capital so that they can be able to beat those deadlines.